उमर दरवाजा बंद कर दो।
دكتور المفروض الدرون بتاع الاحمد
अस्सलाम वालेकुम।
كده كويس ما تعرف. ايوه الزراعه اول حتى انا ما بقدر والله انا لو شهدت اهلي ما بقدر. قلت له انا والله انا ده قلت لي اخذي اعطونا ذاك صباح والله ما يصح انت ده استفاد كده على النظر اعطي ورانا hello
हेलो।
yes how are you
अल्हम्दुलिल्लाह। व्हाट अबाउट यू?
alhamdulillah fine alhamdulillah
यू आर बिजी समवेयर?
لا تعال start the class
Can you start?
yeah start
You can see my screen.
yeah I saw your screen
Okay. Okay. Now we have another example of that income tax liability. Okay. Now Thomas has taxable trading income of 135,000 pounds and employment income of 33,000 for the tax year 21-22. He does not have any savings income or dividend income. Now we have to calculate the Thomas income tax liability. So his total income is 168,000. Okay. So it's more than 125. So there will be no personal allowance. Okay. So now we have a taxable income of 168. So we divide it like this: 20, 40, and 55. 45.
yeah
The total income tax liability would be 60,000. Okay. In this example, as the total income, net income equals to A and I, and this exceeds 125, so personal allowance is nil. If it is clear that total income equals net income because there are no reliefs, it is not necessary to use both labels. Okay. If we look at the effective rate of tax on income between 1 lakh and 125 is 60%. Okay. Higher rate income tax is 40%. Lost personal allowance half of 40%. This is 20%. So he is paying 60% tax when he is earning between 1 lakh and 125. Taxpayers at or near this margin may therefore wish to consider making additional gift aid or personal pension contribution in order to reduce their ANI below 1 lakh. So for tax avoidance, he can just consider making any additional gift aid or personal pension contributions to reduce its ANI. He can plan for this if he wants to reduce tax. Okay. Hello.
hello yes I hear you
Okay. Can you move forward? Okay. Now we have an example of Fernanda is employed on an annual salary of 1 lakh pounds in the tax year 21-22. Okay. How much additional income tax would Fernanda have paid if in addition to her annual salary she had received a taxable performance bonus of 25,140 during the tax year 21-22? He is getting a addition to her annual salary. Okay. Now, if we compute, employment income is 1 lakh, personal allowance, he is getting 12,000 because he is at 1 lakh, not more than 1 lakh. So total income is 87,430. If we take out the basic calculation, income tax liability is 27,432.
اهلي مرات لذلك
Okay.
Okay.
Then we have a bonus of 25 140. So employment income becomes 125 140. There will be no personal allowance.
Okay.
So the total income is 125 140.
Yeah.
Then we calculate tax. So income tax liability is 42. It has increased
Okay.
from 27 to 42.
Yeah.
Okay. So additional tax she is paying or he is paying 15,000.
Yes.
So on additional income, taxable income of 25, tax of 15,000 has been paid. Okay.
Okay.
So the effective tax rate is 60%. For 25,000, he's paying 15,000 tax.
Okay.
So to calculate in a quicker way, how we can calculate higher rate tax on additional income, that is 25 140 multiply by 40%.
الو والله ادخل العربي اخذ لك من شهر الو
Hello.
الو yes yes I heard you
Hello.
yes yes hello
Voice is quite low.
yeah now
Hello.
yes yes now you heard me
I cannot hear you. Voice is very low.
now can now
Hello.
hello yes yes
Hello.
yes yes I heard you
Cannot hear you.
hello
Yes, now I can hear you.
now continue
Hello. Hello.
yes yes I hear you hello
Can you hear me?
yeah I hear you I hear you
I can hear you, but your voice is very low.
yeah
There's some issue or what?
internet issue
Internet.
internet issue
Okay.
I hear you can continue
Okay. Let me know if you have any issue. Okay. Now, when we calculate, a quicker way to calculate the additional tax is the higher rate tax on additional income. You have additional income of 25,140.
okay
Okay. And the higher rate was 40%.
okay
Okay. So we have 10,000 and lost personal allowance 12,570. So this is also treated on the higher rate. So you get 5,000. So 15,000. You can calculate this in this way as well. Okay. Hello.
yes I hear you can continue
Okay. Clear here?
clear
Okay. Now we have a marginal allowance. Sorry, marriage allowance. The marriage allowance allows a spouse or civil partner to elect to transfer a fixed amount of personal allowance to his or her spouse or civil partner. The marriage allowance allows a spouse or civil partner to elect to transfer a fixed amount of personal allowance to his or her spouse या civil partner or civil partner. The marriage allowance may also be referred to as the transferable amount of the PA. The marriage allowance is available provided neither spouse or civil partner is a higher rate or additional rate taxpayer. Okay, this is only available when neither spouse or civil partner is a higher rate or additional taxpayer. It does not fall in that category. So then he will be allowed a marriage allowance. Okay. Okay.
Okay.
Can you hear me?
I hear you. I hear you. Continue.
Can I move forward?
Yes.
In practice, however, hello.
Yes, I hear you. Can continue.
Okay. In practice, however, it will only be beneficial to make the election provided the transferor spouse or civil partner does not fully utilize his or her personal allowance. If one man is not able to use his all personal allowance, then this will be beneficial to transfer some personal allowance to his partner. So that their total income tax liability as a couple is reduced.
Yes.
Electing for the MA allows the transfer to the other spouse or civil partner of a fixed amount of personal allowance, regardless of the amount of unused personal allowance, equals to 10% multiplied by the individual personal allowance. That is equals to 1260. You can transfer 10% of the personal allowance. Okay. There is no provision for transferring more or less than this amount. Okay, there is no provision. You can transfer not less than, not more than this amount. Okay. 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 The effect of election is that transferring spouse personal allowance is reduced by the fixed amount of 1260 for 2021-22. The recipient spouse income tax liability is reduced by a maximum of 250. It means 1260 multiplied 20% basic rate income tax. So maximum liability could be reduced is 252.
Yes.
Okay. Note, the relief is given as a deduction from the recipient's income tax liability. You can subtract this from income tax liability. The recipient's own personal allowance is not increased. His own personal allowance will not be increased. Okay. You can just use this to reduce its tax liability. The maximum benefit from the marriage allowance is 252 only. Okay. If the recipient's income tax liability is less than 252, a tax repayment is not possible, but the amount of which the transfer personal allowance is reduced remains 1260. You will not get a cash refund. Okay. You can just get it a maximum till 250 or less than that.
Okay.
At best, the relief reduces the recipient's income tax liability to nil. You can just pay to nil, not minus.
Okay.
In the year of marriage, the full allowance is available. If it's in the year of the marriage, between the year you have married, but full allowance will be, it will not be like this. If you are 6 months old for your marriage, so you will get 6 months allowance. It's not like that.
Okay.
Okay. Marriage allowance tax saving. If one spouse or civil partner has unused personal allowance of 1260 greater than or equal to 1260. If one spouse or civil partner has unused personal allowance of greater than or equal to 1260, the maximum tax saving will be achieved of 250, provided the recipient spouse has an income tax liability of greater than or equal to 252. This you can achieve maximum. Okay.
Okay.
If one spouse or civil partner has unused personal allowance of less than 1260, if one spouse or civil partner unused personal allowance of less than 1260, the fixed amount of 1260 must still be transferred. Okay. You have a personal allowance of less than 1260, fixed amount of 1260 must still be transferred. However, the transferring spouse will have to pay some tax. The maximum total tax saving for the couple will be unused personal allowance multiplied by BR income tax.
Okay.
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 Now we have an example.
Okay.
Kevin and Judy are married. Kevin is employed and has employment income of 35,500 per annum. Judy spends most of her time looking after their two children, but works on Saturday and has employment income of £6,000. They do not have any other income. Judy makes an election to transfer the marriage allowance to Kevin. Okay, Judy has made an election to transfer the marriage allowance to Kevin.
Okay.
Okay, now we have to calculate Kevin and Judy income tax liability for the tax year 21-22. Now we have an employment income of 35 and 6,000. Okay, we have a personal allowance of 12,570.
Yes.
Twelve five seventy. Yes, hello.
12,570 is that exempted amount.
Yes. Then we have 6,000 personal allowance minus from Judy.
Yes. Yes.
Judy makes an election. Okay. Then taxable income is 22,930 and Judy has 0.
Yes.
Okay. So income tax liability of 22,930 will be falling in the 20%. So the tax is 4,586. And marriage allowance 1260 multiplied 20%, that is 252. You can just get a benefit of 252 for this marriage allowance for Kevin, because Judy has given
means that exempted.
Yes, Judy has given his marriage allowance to Kevin. Okay.
Okay.
Now the income tax liability is 4,334. Note, Judy personal allowance is reduced to 11,310. How?
Okay.
Maximum allowance is 12,000. He has given 1260 to Kevin.
Yes.
But this is still more than her total income of 6,000. So she still has no tax liability.
Yeah.
Okay, it's simple, I think.
Okay. Yeah, simple.
Now, to be effective for the tax year 21-22, the election can be made in advance by 5th April 2022. The election will remain in force for the future tax year unless the election is withdrawn or the condition for relief are no longer met. Okay.
Okay.
If you want to do it in arrears by 5th April 2026, within 4 years of the end of the tax year. In this case, the election only applies to tax year 21-22 in isolation. If you want to do in arrears, so it will be by 5th April 2026. That is within 4 years of the end of the tax year.
Okay.
Okay. In this case, the election only applies to tax year 21-22 in isolation. Okay.
Okay.
Then we have income tax payable now. Marriage allowance is clear.
Yes.
Income tax payable. Employment income is received by an individual after income tax has been deducted. Employment income is received by an individual after income tax has been deducted. The employer is required to deduct income tax from employment income under the pay as you earn system and paid to HMRC on behalf of the employee. However, the employment income figure which must be included in the individual income tax computation is the gross figure before pay has been deducted. Okay. The individual income tax liability therefore includes income tax on the gross employment income. To avoid the double payment of tax by the employee, credit is given for the income tax already paid by deducting it from the income tax liability as the final adjustment in the income tax computation. Income tax payable in is the income tax liability less any tax already deducted from the taxable income. Income tax payable is therefore the amount of tax still outstanding and due to be paid by the individual as follows. Okay.
Okay.
Hello.
Hello. Yes. Hear you. Continue.
Okay. The income tax liability less pay on employment income. So you have income tax payable. The income tax payable is collected with a self-assessment system. It is in chapter 13. In the event the amount of tax already paid under pay is greater than the liability, a refund will be given via the self-assessment scheme system. Sorry. Okay.
Okay.
Income tax liability. The total income tax due on the taxpayer's taxable income, that is total income after deducting available personal allowance. Income tax payable. The final tax will be final tax bill to be paid via self-assessment after deducting tax already paid on employment income. That is pay as you earn.
Okay.
In examination, figures provided for employment income, salaries, and bonuses will always be before tax has been deducted under pay unless specifically stated otherwise. Okay.
Okay.
Can we move forward?
Yeah.
Akram has taxable trading income of £41,870 and gross employment income of 12,250 for the tax year 21-22. He does not have any savings income or dividend income. Pay of £80 was deducted from his employment income. So first we calculate the total income, that is 54,000, 41 and 12,000 less the personal allowance, that is 12,000. Taxable income is 41,550. Okay.
Okay.
So income tax is 9080, 20 and 40%.
Okay.
Then we just subtract the pay as you earn, which is already deducted from his salary, that is 80 pounds. So the total income tax payable is 9,000. Okay.
Okay.
Can we move forward?
Yes, yes.
Tax relief is available for certain payments made by an individual and for trading losses. Tax relief is available for certain payments made by an individual and for trading losses. Relief is available by deducting payment losses from total income, subject to a maximum amount of relief. The only payments deductible from total income which are examinable at the taxation are certain qualifying interest payments. Loss relief is covered in detail in Chapter 11. The amount of relief allowed to be deducted from total income is restricted. At taxation, this restriction will only examine the context of loss relief. Okay.
Okay.
Then we have our qualifying interest payments which can be deducted from the income tax liability. Okay.
Okay. Okay.
Relief is given for interest paid on loans incurred to finance expenditure for a qualifying purpose. Relief is given for interest paid on loans incurred to finance expenditure for a qualifying purpose. There are a number of qualifying purposes to the loan must be applied. The only ones relevant to examination are as follows. First of all, employees. For employees, the purchase of plant or machinery by an employed person for use in his or her employment. For employees, if he has taken a loan for the purchase of plant or machinery which he will be using in his employment, it is allowed to minus that interest expenditure from his income tax liability.
Okay.
The purchase of shares in an employee-controlled trading company by a full-time employee. Purchase of shares in an employee-controlled trading company by a full-time employee. Then you have partners. The purchase of a share in a partnership or the contribution to a partnership of capital or loan, the borrower must be partner in the partnership. The purchase of plant or machinery for use in the partnership by a partner. Relief is given by deducting the amount of interest paid in the tax year from total income. Okay.
Okay.
You are getting my point?
Yeah, go ahead.
Okay. Now we have example. Anwar and Mila each have
Anwar.
total income of 54,000.
Yes.
None of which is savings or dividend income. This income is not savings or dividend income.
Okay.
They made the following payments during the tax year 21-22.
Okay.
Anwar made interest payments during the year totaling 2,000 on his mortgage for his main private residence. Anwar made interest payments during the year totaling 2,000 on his mortgage for his main private residence. Mila made interest payments of 2,000 on a loan to invest in a partnership in which she is a partner. Calculate the income tax liability. Total income 54. Relief. Anwar interest payment does not qualify for relief, but Mela got it because why? Because Anwar was paying for his private residence and Mela was paying to invest in a partnership in which she is a partner. So its liability has been decreased. Personal allowance, taxable income, then same calculation. Mortgage interest paid for a main private residence is not qualifying interest and therefore not deductible as a relief. Clear? Is it clear?
Clear, clear, yes.
Then we have a charitable giving. Sadka.
Yeah.
Tax relief is available for charitable giving, normally in one of two ways. Donations under the gift aid scheme, payroll giving under the payroll deduction scheme. Deduction under the gift aid scheme are covered below and the payroll deduction scheme is covered in chapter 5. In limited circumstances, tax relief is also available for charitable donations made by self-employed individuals by deduction from their trading profit. This is covered in chapter 5. Now, donations under the gift aid scheme. Taxpayers who wish to make gifts of money to charity can obtain tax relief under the gift scheme aid scheme as follows. Okay.
Okay.
Donations made under a scheme attract relief at the donor highest rate of tax. Donations made under the scheme attract relief at the donor's highest rate of tax. There are no minimum or maximum contribution limits and gifts can either be one-off or a series of donations. The payments are made with basic rate tax deducted at source. The payments are made with basic rate tax deducted at source, effectively providing basic rate tax relief 20% at a time of payment. That basic rate tax is then claimed by the charity from HMRC. Therefore, if an individual wants a charity to receive 100, the individual pays the charity 80 and the charity claims 20 from HMRC. Okay?
Okay.
Basic rate taxpayers obtain the tax relief at the time of payment by only paying 80% of the amount of donations. When we are talking about basic rate taxpayers, they can obtain the tax relief at the time of payment by only paying 80% of the amount of donation. Okay?
Okay.
Higher and additional rate taxpayers. Relief comes in two parts. 20% tax relief is guaranteed at the time of payment is made as above. Higher additional rate relief is obtained by adding the gross amount of the donation to the basic and higher rate bands in the income tax calculation. The gross amount of donation is calculated as amount paid by the individual to a charity multiplied by 100 by 80. When we'll just do the practical question, it will be more clear.
Yeah.
The effect of extending the basic and higher rate bands is that income equivalent to the value of the gross donation is taxed at 20% rather than 40% for a higher rate taxpayer, or if an additional rate taxpayer at 20% rather than 45%.
Yes.
This gives the further 20% tax relief that the higher rate taxpayer is entitled to, and a further 25% tax relief for the additional rate taxpayer. Are you there?
Yes, yes, I'm here.
Okay. Now we'll just look at the question. Brenda has a employment income of 55,000 each year and makes a payment of 3,600 pounds to RSBP under the gift aid scheme. So first we have to calculate the employment income, that's less the personal allowance, that is 42, and income tax liability is 8532. Okay.
Okay.
Then we have extended basic rate band. We have a basic rate band of 37.7. Okay.
Okay.
So gross gift aid donation, that is 3,600 multiplied by 100 divided by 80.
Okay.
4,500. So he has an extended basic rate band of 42,000 now.
Yes.
Okay. Now its basic rate band has been increased by this amount, 4,500. So we have calculated 42,000 by 20%. Here it is 8,440, and the other at higher rate, which is 230 by 40, that is 92.
Okay.
Although the higher rate band is also extended by 4,500, this has no effect on Brenda's tax liability as she is not an additional rate taxpayer. Okay, he is under the basic rate. So it is not coming in the additional rate. So there is no change in liability.
Okay.
You understood the concept now?
Yeah, I understood. I understood.
Hello?
Yes, yes, I hear you.
Clear?
Yeah, clear.
Okay. Now we have a child benefit tax charge.
Okay.
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 Child benefit is a tax-free payment from the government that can be claimed in respect of the children. However, a child benefit income tax charge arises where an individual receives child benefit. He or she or his or spouse, civil partner, or his or part whom she is living with it, if they were married in a civil partnership and has an adjusted net income of 50,000 or more, then he will get a child benefit
Okay.
income tax charge. Okay.
Okay.
Adjusted net income is calculated in the same way as for the restriction of personal allowance for high income individuals. The tax charge as follows: between 50,000 60,000, 1% of child benefit for each £100 of income over 50,000. 1% of child benefit for each £100 of income over 50,000. Let me renew the meeting. It is stopping. I am renewing the meeting.